Coming up in today's review, stocks finish lower, led by tech, Tesla falls 4%, Apple falls sharply again, gold hits new highs, along with Bitcoin before diving. Hey, what's up guys? Welcome back to the Click Capital Daily Market Review. And apologies I couldn't make it in yesterday. And we've got a bit of a sour Tuesday happening here, led lower by tech stocks, especially in the software space. Salesforce off over 5%, also got some weakness in the semis, and the big ones down as well. Microsoft off 3%, Adobe 4%, and Apple almost 3%, in addition to the big fall from Tesla today. And this could be the start of a bit of a rotation, as we did see some strength come out of energy and oil and gas today, and a little bit of a bid in the consumer defensives, and we've got a bit of a bounce coming out of regional banks as well. Still too early to say whether this is a start of a larger correction, just looking at the S&P 500 daily chart here. Still well within a normal pullback of this strong parabolic uptrend we're in. Was the second biggest fall for the Nasdaq today, off 1.79%. Got volatility popping up here a bit today, getting over 15, and a pullback in bond yields with a 2-year just above 4.55, and a bit of a sharp turn down today in Microsoft, losing its 50-day VWAP, quite a large red Marabuzu candle on above average volume. Still got Nvidia holding up, Supermicro Computer holding ground after it was just added to the S&P 500 that we heard on Friday afternoon. However, the big story today is Apple, which has been on quite the slide the last couple of days, and from the last day of last year, it's now down over 11%. Pretty big move for the previously biggest company on the stock market. Now got a market cap of 2.63 trillion, and we very well could see Nvidia overtake them. Who knows, maybe in the coming weeks. They're now sitting at 2.15 trillion, and dare I say they may become the largest company in the world, because Microsoft isn't all that much further ahead at 2.99 trillion, and the way Nvidia is trading just seems to show no signs of slowing down. However, just getting back to Apple here, looking on the weekly chart, you can see it's been consolidating for over 2 years now. We've got the next level of support around this 165, 170 area. And so there's a few reasons why it's weak and it's gotten weaker in the last couple of days. So for the last year or so, growth has pretty much plateaued. Haven't really been seen really good numbers coming out of Apple. In fact, last year, they saw revenue declines. The last quarter was only up low single digits. They don't really have a new exciting AI product for the market to get excited about, because this is what this market is currently hooked on, all the excitement over artificial intelligence. And so that's been the backdrop for a little while now. Then just coming into this week, we've got more negative headlines, like iPhone sales slumping 24% in China, a very important market for them. Not to mention the European Union doing what they do best. It's issuing big fines to big American tech companies, with some saying that's just the start of more to come. That's an almost $2 billion antitrust fine from the European Union. Not to mention the US Department of Justice in the final stages of a years-long investigation into Apple, which could lead to a lawsuit as soon as this month. And that focuses on everything from the seamless integration between the iPhone and Apple Watch, to the company's digital payment system and its use of green text bubbles to differentiate Android text messages from iMessages, and some saying that's nothing short of an all-out assault on Apple's walled garden. So that's what these regulators, both in US and abroad, come after these mega cap tech stocks, is because they build their whole ecosystems to kind of lock the user in, which some say makes it more convenient, others say that limits competition and innovation. But there's no doubt these big tech companies engage in monopolistic practices and pricing. That's how they're still able to keep these really high operating margins and growth, even given their massive size. And so for a large stock that isn't really growing anymore, it's got all these headwinds. We don't know how Vision Pro is going to go until we hear from them in the next quarter. They're promising us an AI product that could be an opportunity or a risk, depending how it goes. One important factor in this stock is the Buffett indicator. As Apple is 50% of Warren Buffett's Berkshire Hathaway portfolio, he didn't really talk about it much in his latest annual report, which means you may think it's expensive, could already be in the process of selling shares. We don't know until we get the next 13F from him. And if that were to happen, that's two negatives. Since he holds so many shares, he would increase the actual supply of stock coming to market. Not to mention, he's a big sentiment indicator on the stock. A lot of investors have followed him into the stock, and so if he sells, a lot of other people are going to sell. And maybe it's been selling off these last couple of days and weeks because Buffett himself is offloading, taking some chips off the table here, as no matter which way you look at it, it's just not really cheap. But looking at the price action in the Nasdaq, for years, however Apple went, the market went. However, with Nvidia stealing the spotlight here, along with a bunch of other semiconductor and AI related stocks, so far the market doesn't really seem to care. Not to mention Alphabet, it's been a bit weak these last couple of weeks and this year as well, which was previously the third largest stock in the world, but now Amazon is bigger at 1.8 trillion, and of course Nvidia is racing to the top. And this is in an environment this year where a lot of stocks have been on fire. In fact, stocks with the strongest demand for bullish options keep outperforming the S&P 500, which is pretty unusual stuff. But the more we see rips in these risk assets, meme stocks, cryptocurrencies, the less likely it's going to make Jay Powell want to cut rates and pour fuel on this fire here. And that's why this bull market in stocks may need some bad economic news to keep climbing. That's because if we get some soft economic data prints, that opens the door for the Fed to actually cut rates, or at least not have to raise them anymore, which is still a possibility this year. And if we do see a rotation out of tech, AI, crypto, everything that's been on fire lately, maybe big money rotates into value stocks, commodity stocks, miners, other things that have been punished for years now. And there's a look at the long-term monthly chart of the spread between the value Vanguard ETF and the growth Vanguard ETF, potentially looking to put in a triple bottom here. You can just see that massive underperformance just in the last year alone of value versus growth, down 32%. So this could be a place that sees a bit of a bounce this year, or at least a place to hide out if things take a turn. We've also got previous market leader that used to be trading like Nvidia, Tesla, weak as well like Apple, and fallen again today after a suspected arson attack halts production at its Berlin Gigafactory. Now normally that wouldn't be enough to knock shares down so much, as it could be easily assumed they'll sort that out in no time if they haven't already, and production should be back on track. However, it just highlights how vulnerable sentiment towards this stock is for any bad news, and we can see that in the stock price now coming back down to test these mid 170 levels. And just like Apple, it's been consolidating for the last couple of years, and just looking on the monthly chart, I've had it drawn in here for a while now, the potential head and shoulders formation that could be playing out. I've had the neckline in at 175. We get a close below 165 and that holds. It's quite possible that Tesla trades down below 100 for the remainder of this year, as it still isn't quite cheap here with a market cap of 575 billion. Over 80% of its sales still come from selling electric vehicles, of which is a little less than 100 billion a year. And this stock is normally really sensitive to market sentiment, and it's already weak when the market's ripping. So I wouldn't assume there'd be a rotation into Tesla if the market came off. Might actually exacerbate the downtrend. But let's keep in mind that election year seasonality and medium-term technical signals still favor the bulls here. Just looking back in history, what happens when the S&P 500 is positive in November, December, January, and February, like we just got? Well, there's not a huge sample size. It's only occurred 11 times in the last 70 years. However, 100% of the time, we end up finishing the rest of the year higher, with a median gain of 12.78%. And what you'll notice in this table here is the current 4-month change is 21.25%. That's the highest November to February performance we've had. So you could think maybe the market's already front-run this seasonality and technical bullishness, and we've eaten up all those future gains. However, that's not necessarily true either, because just looking at 4-month periods, where the rate of change has exceeded 20% like we've done in the last 4 months. Well, once again, that's really bullish, medium-term technical signs. Looking out 6 months, 9 months, and 12 months ahead, we are higher 100% of the time. Very hard stats to bet against for the bears. And moving on to commodities, we've got gold trading really strongly here after being consolidating for months and months. It's finally woken up, and media headlines are attributing it to rate cut optimism, weak economic data. However, it could be more of a flight to safety, geopolitical turmoil, maybe big money's already starting to rotate out of tech into precious metals. We do know central banks, especially those trying to pursue de-dollarization, are accumulating the shiny metal at record levels, including the Chinese, looking to build more of their reserves into gold. And so even now we've got big buyers in the market, still not seeing a lot of widespread buying coming from across the market, investors at large. In fact, we've even got the gold ETFs experiencing outflows this year. And just looking at Google Trends for the search term buy gold, nowhere near hitting highs that we've seen over the last 20 years. Same deal looking at the last 5 years and the last 12 months. Looks pretty flat here. And I'd say a big part of that is a lot of people have been convinced to switch their funds into the new digital gold, Bitcoin, which has been on absolute tear this year. After we saw the launch of the new Bitcoin ETFs mid-January, they initially took a dip before ripping back up and actually just took out highs earlier today. And this is on the back of record inflows into these new ETFs, with the BlackRock Bitcoin ETF, the fastest ever ETF to hit $10 billion in assets under management, and billions more flowing in each day, with the total assets of the top 10 US spot Bitcoin ETFs now approaching a huge 50 billion just over a month. And just looking at the monthly chart of Bitcoin itself, reached 69,000 to the dot back in November 21. There's a look at the daily chart, and just going down to the 15-minute chart, we almost hit it yesterday, just getting up to 68,850. However, just before 10 a.m. this morning, New York time. It got above 69,000, hitting a new all-time high and reaching $69,210 before quickly being sold off and just switching back on the volume on pretty big volumes as well. So to my eye, that looks like the whales have sat back and watched as the rest of the market's pushed to all-time highs. Then it's just faced a wall of sell orders and they've offloaded onto the market, actually getting down to 59,000 a coin just 2 hours ago as I speak. And so apparently the world's future reserve currency has price swings of 15% in just a few hours. And don't get me wrong, I'm not calling a top here, even though we are really stretched in the short term. It's just an interesting candle and volume price action after hitting all-time highs. And so it's still yet to be seen, just looking on the monthly chart, whether this is a base that it's going to go on to rip higher. A lot of people targeting 200,000 a coin, looking at previous bull market extensions. However, this still could turn out to be a triple top, as there is quite a lot of bullish sentiment in this. And just looking at the daily chart of the largest Bitcoin ETF, the iShares Bitcoin Trust, this to me looks like a topping formation as well, especially this candle here, which is pretty much a bearish engulfing. Huge move down on huge volume. Same deal with some of the Bitcoin proxy stocks like MicroStrategy. Big down move off 21% on well above average volume. And the Bitcoin miners are already doing a lot weaker. We've already got Marathon Digital having lost its 50-day VWAP today. Riot Platforms closing below its 50-day VWAP. And Coinbase looking a little toppy, at least in the short term here as well. But don't tell that to option buyers. They're still loading into MicroStrategy calls. 6th most traded stock options today, 619 million in call options versus 193 in puts. Same deal with Coinbase and Marathon as well. And overall options market, still betting on higher prices, 56% calls today. On a very heavy Tuesday, 45.8 million contracts traded. And just looking at the overall weekly crypto asset flows, we're really peaking out here these last couple of weeks, as it's no doubt pulling in a lot of new investors into the space. And just looking at Ethereum as well, big spinning doji on volume here. And this coming at the same time, we've got gold ripping up the last couple of days and actually closing higher today, just a few dollars off reaching a new all-time high. But yesterday and Friday we saw new record all-time closing highs. Just moving on to economic data today, got the services PMI coming in a little stronger than expected. Still expanding. A little bit weaker on factory orders though, contracting month over month 3.6%. Tomorrow we'll get some JOLTS job openings, testimony from Fed Chair Jay Powell, jobless claims on Thursday, and going into the first Friday of the month, we get a look at the jobs market, non-farm payrolls, and the unemployment rate expected to come in at 3.7%. That'll be an interesting one to watch for. There's a look at Fed Fund futures. The market's still given about a 70% chance Fed's going to start cutting come mid-year. And the stock market's no longer extremely greedy. It's only greedy, but still pretty close there at 74. And once again, the Jaws gap and corporate insiders selling over buying continues to widen. 293 sales yesterday versus 66 purchases. And just getting back into the charts, looking at my sector trends table indicator. See, we've got the S&P and NASDAQ below the 5MA. Same with consumer discretionary, healthcare, industrials, tech, home builders and biotech, which have recently been some really strong sectors this year. However, some of the weakest sectors could be turning, like oil and gas, energy still holding up there, along with materials and utilities, and even REITs as well, green across the board. It's a bit of a pop-up there in bond prices today. TLT reclaiming its 50-day VWAP. Dollar index sitting right below 104. Shipping and cargo rates still in a really strong medium-term uptrend, and crude oil just consolidating above $78 a barrel after briefly getting above $80 late last week. Still a little bit of a pullback in China securities and clean energy as well, testing these multi-year supportive lows. Flat day international stock markets for their Tuesday session, with the China 50 index a standout and the Nikkei and Aussie all pulling back a little bit. And a bit of a bounce up rotation into value versus growth today, getting above its 50-day VWAP, and discretionary coming off versus staple stocks as well, with a strong move up in gold versus stocks. And there's a look at inflation expectations, still in a short-term uptrend. Weakness in the growth sectors today, semi, ARK Innovation, IPO, tech stocks, and discretionary. Well, we saw energy, oil and gas trade up, along with gold miners continuing to have a good bounce off this support. Big relief rally in regional banks, and with staples and dividend stocks actually trading higher. And some of these other big growth stocks we've been watching, DraftKings, CrowdStrike, Vertiv, Wingstop, all coming off a little bit today, along with that big bounce in New York Community Bancorp. For now, it looks pretty isolated from the market, what's going on here, and other big moves in these other vulnerable regional banks, which spilled over to the big guys as well, who also put in some green candles today. There we are, guys, for this Tuesday session, pulling back here to 50.78 in the S&P. Whilst it's still in a well-defined short-term uptrend, got some of these big stocks like Apple, Alphabet, and Tesla breaking down and well-defined short-term downtrends. The market's really hanging its hat on Nvidia to hold the show up. If it falls, then it's probably going to take the market with it for a well overdue short-term pullback at least. But like I showed in the seasonals and medium-term technical signs, the forecast for this year is to finish higher. So I can imagine any dips will be well bought and supported unless we get a real nasty surprise or spill over in geopolitics or something like that. Other than that, the trend for now is still overall up, even though we got a little bit of a rotation today. We'll see what the jobs market report brings us this Friday, and we may indeed just coil up and trade sideways until then. Thanks very much for tuning in to the daily market review and hitting that like button, and I'll see you again tomorrow night. Cheers.